Hey everybody, Hutch here. I have a very special guest today, Hans Albrecht. Is that how you say it?
That's right.
Hans
You
is
got
an
it.
options wizard. Hans, why don't you tell everybody a little bit about yourself and just your pedigree with options?
So I've been doing this a long, long time now. I started off as a pro market maker in 1995, pro options market maker. And so we were called specialists at the time. So we called markets on anywhere from 5 to 10 different names. So, you could just pick a Microsoft or a Tesla. So I would be responsible for setting the markets for all the option months, expiries in those particular names. And back in those days, it was a little bit more, it was a little less automated
Mhm.
until around 2001, 2002. And then everything kind of went automated and the computers took over a lot of the fun ended. But I worked on the old floor with all the hand signals and all the
Nice.
craziness and yelling, just like in Trading
Trading
Places in the movie
places,
there.
yes. Now
A
that you're
ton,
running a
yeah.
trading service, that's still what you're looking for. You've kind of joined the ranks of automation and now you do give a coaching program, but you're looking for products, stocks, things where there's a lot of volume, a lot of liquidity, a lot of volatility because that's good for options. We're going to talk about that. And I thought it'd be a great thing to talk about these new iBit options with the Bitcoin ETF trust to show a different way to play it. Typically coin go up is what every crypto bro is looking for, but there's a whole other dimension with time and yet another dimension with volatility that there's some ways to profit in a very high probability strategy of selling option premium where you're kind of the house. Doesn't mean that there's not risk, doesn't mean that there's not risk of loss, but the odds are in your favor because we don't know whether token go up, token go down, but we know that time will march on. And when you're a seller of options, you can benefit from this, right, Hans?
You can, and really the heart of being an option seller is understanding volatility. So we know options. I mean, there's a very linear payoff with stock. In the options world, we have multiple dimensions to watch. So we don't just have the underlying, which is of course where everything, all roads lead back to the underlying, which is Bitcoin in the case of iBit. But we have volatility, and what we saw in the last few weeks is we saw volatility really explode. And so Bitcoin is a little bit like gold in the sense that it's a bit of a, you could use whatever word you like, but let's say it's a safe haven, it's a store of wealth, it's a place where people kind of run to in times of stress or worry. In this case, after Trump, it wasn't so much worry; it was just excitement over the prospects going forward with such a pro Bitcoin president. Um, but it tends to have this kind of upside skew and this tendency for volatility to rise as the underlying rises. So whereas the rest of the market, the VIX comes down when stocks go up, in this area, the VIX of these products and all the
Mm.
coin names go up as well. So it's become an area where you have extremely high volatility. And as you say, you can take advantage of that if you know what you're doing.
Yeah, and just to give people a little bit of context, traditionally with stocks, volatility increases when stocks go down, not so much when they go up. Like there's a great saying in the stock market, stocks take the stairs up and they take the window down. And you've probably seen that in your own retirement plan over years. Things just kind of melt up, grind up slowly. So then volatility is really low. And that means when you're selling options, you don't necessarily get a great price. So a lot of times when you're selling options, you're selling insurance. And so imagine being able to sell insurance when the hill is on fire next to the house. Insurance company won't give it to you, but in the options market, you can. So that means when the sky is falling, volatility gets really, really high, and you can sell options. You can sell that insurance for a lot of money. What Hans is saying is what's unique to iBit and Bitcoin is the volatility is to the upside since Bitcoin has the potential to just rocket ship away. You're actually getting very, very high premiums in an up market, which is really unique to this product, correct?
Yeah, it is quite unique. We are, interestingly enough, though, we're starting to see a lot of parabolas out there. So you're looking at, it's a lot of the Kathy Wood stocks are coming back. A lot of, the DocuSigns, little companies that are kind of doing the parabolic thing on the chart. And we're starting to see volatility rise into those kinds of moves. So I would say this isn't your usual volatility market. There are some weird things going on out there, but the sort of poster child for that has been this run up in MSTR, in Coinbase, in some of these miners as well. And so one of the areas where people have taken advantage of this, to your point about selling premium, is to the downside. So what we've seen is a real push up in downside skew. And what that means is those puts are being pushed up in value to an extreme extent. And so you're able to go out and, let's say on an MSTR, just for argument's sake, with it trading at 400, you can sell a 210 put for quite a lot of money right now. And if you don't think MSTR is going to get down to 210, you're being paid a fair bit of money for selling that insurance policy. So there's quite a bit of high volatility, but also very, very high skew. I'm seeing people sell 700 calls, 700 strike calls on MSTR with the stock trading at 420, 400, and they're getting a whole bunch of money for that. Now, I would never suggest that somebody do that naked. So usually people go the put side because worst case scenario, you end up owning that name, and most people can kind of wrap their head around that.
Let's look at a couple examples. And I know the volatility on MicroStrategy is off the charts, but a lot of people watching this maybe can't. You need to be prepared to buy 100 shares. And so a lot of people don't have like 30,000 of capital they necessarily want to put up to do this. But I think iBit is a great thing.
Yeah, it's had a nice little bounce today. It's had a nice little bounce, the iBit, from the low 56s up to almost 58,
Yeah.
with Bitcoin, of course.
I think we're at 57.89. This is Robinhood right here, or 57.88. This is an option chain. I wanted to show this, and just a friend got a spreadsheet. So over here, you're looking at the price of iBit, and over here, you're looking, I don't have orange, but we'll put BTC. And we're right in this range between 57.58 and Bitcoin is 100. And so what's interesting is, like, let's just talk about selling puts for a moment, because I think this is one of the most conservative strategies. And like Hans said, you're essentially selling insurance. Like, people that buy puts are either looking for insurance for their investments. They want to know that they can lock in the price of Bitcoin. So if you're saying, if Bitcoin ever gets below 95, I would love to buy some. And you can actually put your money where your mouth is. And the reason why someone would buy this option from you, the reason someone would buy this option from you is because they want to make sure that they can at least get 95,000, call it, for their Bitcoin. There's also speculators that just think it will go down. But because there is this liquid market, you can get paid to put your money where your mouth is. And so we're going to look at the 54 strike real quick. Let's actually go back to, let me turn this off, and let's go back.
Yeah, you can think of this as, look, I'm willing to own iBit down at $54, but I don't know if it's going to get down there. But somebody is willing to pay me a decent amount of money for the right to sell iBit down there, and I'm willing to own it down there. So you can think of that as twofold. One is you're willing to buy it down there, and in the meantime, somebody's willing to pay you for that obligation that you might have to buy it down there. And if it doesn't get down there, you get to keep that money. That's kind of the nice part, right? You put that money in your jeans the very next day,
right away,
and then you see where it ends up.
Yeah. So here it is. It's amazing. So to make a promise, like, that's what a put is. A put is a promise that somebody can put the stock to you at $54. And you can, and this, by the way, this is a promise that lasts 2 weeks. I have December 20th, 14 days away. If I promise to buy iBit for $54, and it happens to be you have to have $5,400, you need to do 100 shares. So if you carved off 5,400 that you were planning to buy Bitcoin with anyway at 95, or you had money in a savings account and you thought, oh gosh, you know what? I'll take it at that price. I'll just move it from my savings account. By promising that today, instead of just having this willy-nilly verbal promise, somebody will pay you $1.15 a share times $100. So somebody will pay you $115 today to make that promise. Now, that may not seem like a lot of money. It's only $115. Who cares? But if you think about it, as a percentage, you're getting about you're getting over 2%. So you're getting over 2% on your money. In 2 weeks, you're committing $5,400 to capital. You're collecting $115. You're getting 2% over 2 weeks on your money to promise to buy something that you want to own anyway when it's lower.
Which is 100% annualized. So if you imagine that it's not always going to work out perfectly, but if you were to do this every 2 weeks over a year's time, that represents a pretty good return. Now, that's not the only way you should look at it. You should always consider that you're really only doing something like this if you are comfortable owning iBit at that level. But what a great thing to be able to own something at a lower level, potentially if it gets down there. And in the meantime, you get paid to do that.
It's awesome. I love cash secured puts for stuff I want to own anyway. And I do this with other stocks. I kind of have a watch list. And when you want to sell puts when things are down, so you maybe wouldn't want to do it today because we could have gotten more money if we did it overnight. It flash crashed to 90, the low 90s. But the other day when it was 97, that would pay even more. Like we could even just go up $1. We could have gotten $1.45. Let's talk about the other side. So a lot of people want to be able to make sure they can take profits on the way up. So let's say you own some iBit. Let's say this happened to you. You sold these 54s before, and now it's trading at 58. So you're in profit. This little green line shows where you're at. And let's say you had a profit number in mind. So let's go back to our thing. And you thought, you know what? I think for this part of the cycle, I could see Bitcoin getting to 105. Let's even just say 109. Like, I don't know if it'll get that high, and I don't necessarily want to sell it. Let's just look at these two levels, this $60 and this $62, which would mean Bitcoin would get to 105 and change or 109. For promising to scale out or to DCA sell out and take some profits, you can actually get paid now. So we're going to switch this from puts to calls. So I realized I was on buy put. So the pricing's probably a little different. I digress. You can see I actually have one of these. See this -1? So I promised to sell somebody my iBit at 63, which, by the way, I would be in profit. I would make all that money, another $5 per share from 58 to 63. Plus, I'm already in profit on iBit. But you can see this. Well, we said, let's just do the ones we talked about. If I promise to sell it at 60, let me get my handy dandy pen out here. Yep. So if I promise to sell iBit at 60, which was Bitcoin 105, I can get paid $2 a share or $200 right now. Now, again, you may think, well, Bitcoin's going to go to 120 or 150, but it doesn't have to be an all or nothing conversation. You can do this in an IRA. If you happen to have iBit in an IRA, you could do some of this. And so just like you want to exponentially buy things, the more it drops, you want to buy a little bit more. I call it the hourglass. You want to exponentially buy on the way down, and on the way up, you want to exponentially kind of sell and take some profits because there is going to be volatility. There is going to be movements. But if we think about that for a moment, if I have an asset right now that's worth $58, what's this as a percentage? Like I'm making like over 3%, over 3% right here for essentially, and this is not selling insurance. You're selling this, you're selling lottery tickets to speculators. I'm actually I'm letting somebody take my appreciation over 60. So it's almost like I'm renting out my house. I own this property and I'm going to give a rental agreement with the option to buy. But they can buy it. They're only going to buy it if it's worth more than this. And for giving them that ability to rent my appreciation out above 60, they're going to pay me $200 a day. That's going to enter my account right away. And I can use that money for whatever I want. I can use it to invest in more iBit. I can use it just to cushion my cash account. I can use it to buy alts. I can do whatever. I can pay my rent with it. I can do whatever I want. This is my money. And let's not forget, I'm going to make $200 just from the call. But if it goes from 58 to 60, I'm also making another $2 a share or $200. It's the only risk per se. Like there's always risk to a strategy. What's nice about covered calls is the only risk is an opportunity cost. The only risk is if Bitcoin moons, right? There's an opportunity cost if it goes above 60. Anything to add to that, Hans?
No, I think that's really great. I mean, that's called your call away risk. So you're going to add the appreciation up to that strike price, and then you're going to add that incremental value that you're getting from having sold the call. So that's a nice call away price, and you can almost think of that as being, paid to set a limit order. So all of us have put in limit orders. We've said, okay, I want to sell something at 60, $70, maybe $105. In this case, you can actually be paid to put that limit order in there. Of course, understanding that it could go through 105, and if it dropped below the strike, then you may not end up selling it. So it's not exactly like a limit order, but you are paid for the possibility that it could rise to that level by expiry, and you end up selling your holding. And I don't think that's a bad way to go. Now, one thing I would add to this is we like to look at things from an income standpoint, and that's a very, very important thing to people. But let's say you're somebody who's enjoyed this wonderful run on Bitcoin from wherever, from 25,000 all the way up to 105,000. And you're a little bit worried now as we kind of approach the end of the year, as we approach the big inauguration in January. What you can do is you can actually utilize something called a collar strategy. And what that does is it uses the covered call that Hutch is talking about exactly like that. But you're going to use that $2 in order to buy some downside protection. So you're going to go down in the option chain and you're going to look for something that costs about $2.
Yeah,
And
so
so it ends up being cost free.
yeah, let me just set it up for him. I'm drawing here. Can you still see my screen?
Yeah.
So what he's talking about is great. This collar strategy, actually, Mark Cuban of all people made it famous because he actually sold his original company, I think it was Broad Cable, to Yahoo, and he had a bunch of stock. He had a bunch of Yahoo stock, and it was nearing the end of the tech bubble. So what he did is he sold this call. So he collected this $200, right? And he's selling speculation. In this case, we're saying, you know what? If Bitcoin goes above 105, I'm going to give you all that appreciation. I'm not going to take it. But I collected $200. I'm just going to go ahead and change this to put. We're going to change to buy a put. And then with that $2, what I can do is this is now a debit. I'm going to spend that same $2 I got to make sure that if Bitcoin or if iBit is left less than 56.50, I can always put my iBit to you and you have to pay me 56.50. So let's just go back to my grid here. So that means that I'm locking in the price of about 98, 99 Bitcoin, even if it falls back to 70, even if it falls back to wherever it falls back to. And essentially all I'm doing is I'm renting out my appreciation above 105 for the next 2 weeks. And for that, actually, I'm going to make that green because I collected money for this. That's not green, but we get the point. I collected $200 for this, and then I used that $200 insurance to make sure that I'm collared. Like, think of this, like this is my range. Like I get to keep everything in here, but if it's below this, I get to put the stock to you. If it goes above this, you get to call away my stock from me, and you get to choose your time frame. This, I I think it's a great strategy for like Hans said, for people that have held Bitcoin for a long time. And if you are worried about, like, we would probably do the Januaries. I'm just going to go out to, I think January 17th is the next full month, correct? The 17th option.
Yeah,
Hans?
and it's actually a very popular strategy for people who have low cost basis on various things. If you own Microsoft from $50, you can use a collar to get you through a period of time where maybe there's a bit of uncertainty, but you don't have to trigger any kind of taxable gains by selling out Microsoft, but you can protect it. And so you end up, if Microsoft drops or if iBit drops, you're going to have a little bit of a gain on the put, but it's not going to be something that triggers the full gains on your underlying holdings. So this is a great strategy to kind of get you through a period of uncertainty. And I have to add that because of what we were talking about earlier, and this is very important to gold, to Bitcoin, to various kind of safe haven type assets, is you get that upside call skew is very expensive. So you're selling a relatively expensive call and you're using that money to buy a relatively inexpensive put. So from a vol trader standpoint, it's a little bit vol geeky to talk about it, but you have volatility edge. You're selling the expensive to buy the cheap. Whereas under normal circumstances, if I did that on Microsoft, I would probably be selling the cheap to buy the expensive. So you have a nice little added advantage there in that Bitcoin complex.
I mean, I would say like it's a 42-day option, so expiring January 17th. I did the 68 calls, which is about Bitcoin 120. And so if, let's say you were planning to buy a house or whatever, and you didn't want to sell out, but you wanted to know that you can get some minimum amount, the fact that you can get $2.15 this far out of the money, which means you earn all your appreciation between here and here, that's yours. That's your appreciation.
I
And
like that, Hutch. I like the way you looked at that because you sort of said, I might need the money down the road, but in the
mhm,
meantime, I don't want to sell it because I think there's still some appreciation potential there. But I'm going to need the money down the road, so I need to do something that looks a little bit like capital preservation, right? I can't just sort of hope for the best. What if Bitcoin drops to 60,000 again? So you're going to
yeah,
protect your position while retaining some upside, and that's a really nice structure.
let's just see how far down we can go. But yeah, I mean, anybody that's been in the crypto space knows that 80% drawdowns can happen in Bitcoin,
Can yeah.
and they do happen. So let's see what we can get on the put side. So if I go buy a put, let's see what we can get for our 215. So I can actually keep a little bit of income. So I can do the 51s and keep a little bit of income, right? I sold it for 215, so I keep 25 bucks or 25 cents a share or $25, or I can pay an extra 10 bucks for this. But let's just see what 51 and 52 is going back to my. So this is great, and like a lot of people would be happy with this, like to ensure that they could always sell their Bitcoin between 90 and 90, 89 and a half and 91. Again, you could sell that appreciation. So let me just get the right numbers here. You collect cash here at, I think it was 68. I didn't do this. So you're collecting money. So I'm going to put cash flow positive, and then you're using that money, right, to buy some insurance right here, right? We're negative cash flow here. But you saw that, if you choose the 51s, it's actually a cash flow positive trade. So anyway, I think that's great. I'm really happy you brought up the collar, because the collar is a great trade for people that are kind of uber long or deep in this. And you don't have to do this with your whole bag. Like you can do this with a portion of your bag where you need the money for something. Um,
Yeah. Yeah, absolutely. You can just put it on a portion of it, and then you can always take it off, right? So if you start to feel differently about things, these are liquid products. So iBit is becoming probably more liquid by the day. It was probably one of the most successful launches ever. So these are products that are very liquid. There's a lot of the spreads are generally very, very tight. So there isn't a lot of slippage, which is what we call it when there's a wide spread. And so to buy and to
well,
sell, you're going to
crypto
have to,
bros know about slippage. Do you think slippage is
the
bad in the
slippage,
stock
right?
market? Oh, slippage
Yeah.
is terrible when you deal with dexes and everything. Like there's actually, when you're trading on decentralized exchanges, you can actually put in what your max acceptable slippage is.
Oh,
Like,
wow.
yeah, because it can be really bad. Like you could lose like 10% just on swapping from one token to another token
Oh,
if
that's
there's not enough
terrible.
liquidity. Yeah. But
Yeah,
that's why you get to
that's
put it.
terrible.
You'd say, I want this. It's almost like a limit order. I want this trade, but if there's any more than zero point 0.5 slippage, no, I'm out. So
Yeah.
yeah.
Yeah. Well, hopefully everything kind of tightens up a little bit in that world. And I think as there's more institutional adoption, as it becomes a little bit more mainstream, which is kind of the irony of the whole space, right? It's becoming more mainstream, which is sort of, you know, the kind of the pros. One of the big pros was it isn't Big Brother, it isn't mainstream. And as it becomes more mainstream, maybe it becomes easier for people to adopt it a little bit more. Spreads get better, liquidity gets better, access gets better, right? Now people can access Bitcoin in a way that you couldn't just even a few years ago. I think 100,000 is just a bit of a magnet. So I've been talking about this for about a week and a half, and I've been playing strategies that are taking advantage of a potential crush of volatility. That's when option pricing starts to relax, because we saw these real extremes into that parabolic move into the whole kind of complex, Bitcoin and Coinbase and all these other secondary and tertiary stocks. So I've been thinking, this 100,000 level should act as almost a kind of magnet. And I can almost see us sort of staying here for a little while, maybe almost till inauguration, maybe even longer than that. And so for me, the opportunity isn't as much in playing a direction. It's in playing this idea that maybe things kind of get a little, Bitcoin goes up a little, but then it'll pull back. It'll pull back below 100,000, then it'll kind of swing around this level. And in option speak, we call that pinning. It's going to kind of pin to this level. And so for me, the opportunity is maybe in playing a lack of direction. And that's one of the great things that you can play as an option seller. You can play this idea that you don't always have to bet on direction, that things are going to either go down or up. You can bet on things just kind of sitting around, and you can generate an almost kind of a dividend, like a yield from selling either calls or puts, certain kinds of structures. You can do iron condors, you can do butterflies, you can do straight up cash secured puts, covered calls, things like that. There are many ways to skin a cat in this sense, but really that's part of the reason options are wonderful, is that you can play kind of sort of any expression of how you think things are going to work out. And that includes, I don't think anything much is going to happen.
Well, that's great, because that's just further validation for the two, like probably the most vanilla strategies are the two that we kicked it off with. And I know we're going to show a pretty advanced strategy here in a moment, but like going back to, if the price does pin around this iBit 58, 59, 57 level, if you own iBit, every time it pumps, you could sell some of those calls. And then when it falls, you can choose to sell puts and promise to buy some lower. And you could actually, it's actually, if you do those both at the same time, it's called a strangle. But essentially, even if you cycled your strangle by selling calls on green day, and then when it falls, buying back your calls for a discount, you can also get out of these promises by just buying it back for pennies on the dollar, and then use your buying power to sell those puts. And so you could essentially kind of cycle in a strangle if you do believe that Bitcoin's just kind of going to rumble around this $100 number for a while, correct?
And that's what people are doing, right? And a lot of people in my community, I run a trading community, and a lot of people are selling those way out of the money puts, and some of them are selling way out of the money calls, just thinking, okay, we're not going to get going too far in one direction or another. But people are paying so much to play those levels that you're able to harvest these fairly rich premiums at those levels. So until those relax, we call that the wings kind of relaxing. So when those options start to relax a little bit more, which probably should happen at some point if we do in fact sit around, then there will be another opportunity at that point to perhaps go long options. And that's what makes the space really fun. There's all kinds of different ways to do things. So let's talk about this one. Basically, I want to show you guys an interesting strategy that you can use. So iBit is at 58. And the first strategy I want to show is called a ratio. It's called a front spread technically, but it's a put ratio spread. So what I can do is I can buy a 56 put for 390, and I can sell two of the 53s for 245. So I'm going to reduce my size here. So remember, I'm buying one and I'm selling two of the further away strike. So let's take a look at what this looks like. I'm paying 380, but I'm receiving $2.45 twice, right? So that's going to be 490. So I'm paying 380, I'm receiving 490. So I'm putting $1.10 in my pocket for this particular strategy. And let's take a look at what that looks like. So this is an interesting play, because let's say you were kind of thinking, you know what, I think iBit's a little bit high here. I wouldn't mind owning it lower. And I think we could drift back maybe to 90, maybe 85. I'm not saying that's what you think, but let's say you thought that. down into the low 50s. Well, here's a way that you can achieve, number one, if you're wrong and it just continues to go up or sticks around 60 or 61 or 58, 59, if it stays up in this area, you're going to put $1.10 in your pocket, less your commissions. So no matter what, above 56, you're going to put $1.10 in your pocket. So that's always nice to know that you're at least going to walk away with something. But let's say this thing starts to drop, and here you are. These are January's, by the way. So we've got about, what is that, a month and a half.
Yeah, the 40,
you're going to drift down.
Yeah. Go ahead.
You're going to drift down into this area here, and you could potentially make a whole bunch more down between $55 and $50. You could make a whole bunch more. So you could almost think of this as a little bit of a hedge, because you're long one and you're short two. So you're short an extra contract. Now, what that means when you're short an extra contract is that below $49, you are obligated to own iBit. Now, that's something that a lot of people could live with.
Aren't you obligated below 53 and you're just offsetting with the premium?
Well, you are, but from a cost basis, absolutely.
Got
You're
it.
obligated to own it below 53. Good, very good point.
Yeah.
But from a cost basis, your actual cost price is only about 49.
Gotcha.
Yeah.
Because you collected
so
the
you
money
will
from
own
the
it there.
options. Yeah.
Yeah. And that's something that I think a lot of people could handle. I mean, if you're remotely bullish on Bitcoin, you might be able to envision 49 being a reasonable place to get in. So think of what you're accomplishing here. You're accomplishing something where you think it could go down. You'd like to own it lower. This is a nice alternative to just simply selling a put.
This is very cool.
In this way, you create a larger tent where you can actually make some money, potentially quite a decent amount of money. And if you're completely wrong and it goes up, you still keep $1. So it's one of those sort of little sophisticated strategies that can achieve a number of different things.
And this is what you teach on your Discord, correct?
Yeah, we do this stuff. We do ratios. We do all kinds of fun stuff. And it's really about just kind of finding different ways to express your viewpoint. So I love a strategy that gives me the ability to own something at a price I like, but if it doesn't get down there, I get paid a whole bunch of money.
So just real quick, if you don't mind, can I just keep this up and let me just walk through, because that was quick and I understand you know this stuff by like the back of your hand. I'm pretty savvy with options and I'm getting it, but I just want to just unpack it for everybody real quick. So you bought 156 put. So that's insurance. And going back to my numbers, I don't have to show it. Basically, if Bitcoin is below 98,500, you start to get paid from your insurance. I lost your camera. I don't know if you meant to go away for a little bit. And now you made two promises to buy Bitcoin at 53, which is 93,000. So 200 shares of iBit, right? You're promising to buy at 53. But to Hans's point, you were cash flow positive. So the numbers are really small. You paid 380 for the put and you collected 245 twice. So we're going to multiply that by 2. You collected $490 and then you paid the 380 for that little insurance policy. So your net, you're collecting $1.10 total. So you collected $110. You're committing to buy 200 shares. So at 53, so that's 10,653 times 2. You're committing 10,600 of capital to essentially buy into Bitcoin at 93. And help me understand where you got the 49 average cost, because I'm thinking your average cost is only 50, just under 52, because you only collected 110. Help me understand that. How'd you get to the 49, Hans? I'm probably just missing something simple. I'm missing Hans. Come back, Hans. I need to figure out how to do this ratio. Oh, he's back. Did I lose you?
Sorry, Hutch.
It's okay.
Okay, yeah, I think you got it. You explained that better than I can, actually.
No, listen, you're the wizard here. I'm just a translator. But where did you get the $49 break even? Because I got the break even at 53 minus the $1.10 you collected. No.
Well, you get basically you can think of it as being long a. Hold on, let me get my little screen back up here.
I still see it, by
Um,
the way.
oh, you still see it? Okay,
Yeah.
okay. So you can almost think of it as a one by one put spread. So um, you're going to make 155 bucks just long a put spread if this thing goes down. But you're short that extra put, right? You're short an extra
Got it.
$2.45.
That one insurance policy we have is still kicking in. So we're still profiting on the insurance policy when Bitcoin goes down to 49, and that offsets the cost.
Exactly.
It's
So
not just
yeah,
what we
you're still
collect here.
make exactly. You're
It's
collecting, so you
printing.
have to add. It's printing.
Yeah. The one put that we bought is still printing. And how do you deter, like, is there a way to just napkin math that, or do you have to use this
Yeah,
thinkorswim? How do you
there
napkin
actually
math
is.
that?
Yeah. The
Okay.
fun way to do this is to really, okay, so typically when you do this kind of strategy, it's always nice when you can get a little bit of a credit because as I said, you win even on the way up. Now, the way that some people do this is they do it for basically like a net cost of zero.
Hmm.
So let's say we did this let's say we bought the put for 490 and we sold two of these at 245.
Got it.
That basically nets out to zero.
Yep.
You haven't spent anything, you haven't received anything.
A
You're
free
basically
insurance
spending what you're getting.
policy to a degree, but
Yeah,
for doing
it's
that,
free.
you
So
have to promise. Yeah. Go ahead.
as you can see, there's no P&L to the upside. You've spent nothing on this, and you have no benefit if Bitcoin keeps going up. So the way we wanted to structure it was so that it could actually, yeah, see the market's moving a little bit here, so it's screwing us up. But if you imagine that, let's say it's costless, what you would do to figure out this break even point is to just double the distance between the strikes. So if my distance is 56 to 53 to the
Mm-hmm.
top of this 10 to the short strike,
Mm-hmm.
then that's $3. So then
Okay.
we would just double that to $6.
I
And
got you.
basically that's where you are. At this point, it's moved to $50 because we changed the pricing on it, right? It's no longer 49. So in this case, you just double it. So the back of the napkin calculation is, well, where do I break even typically in one of these? Well, if you can do it for exactly no cost, you just double the distance up between strikes.
And then, so which would bring us to 50. And then all you did is just add back in the credit, and that brings you down to 49. It's actually
Exactly. So
48.90. Okay.
yeah.
That's very
So
cool.
you
Thank you.
exactly. Yeah.
And this is the kind of stuff you teach in your trading group, correct?
It is, yeah, yeah. This is the kind of stuff. I mean, there are different structures. We do a lot of. We'll do butterflies. We'll do iron condors. We do a lot of just the plain stuff as well because I think that's I'm one of those. I find that option traders like to create these complicated, convoluted strategies. Sometimes I'll see people
Uh-huh.
do like these 7 leg strategies, and I think you can overdo it. I think options don't have to be overly complicated. And I'm a big fan of just a simple cash secured put or a covered call. Those are kind of our bread and butter. But then there are times where something a little bit more sophisticated is called for. And particularly when you get high levels of option pricing. So when the VIX is 20 and 21, 22, fear gauges are high, markets are worried, then there are different kinds of things you can do to achieve a similar, thesis on where you think a stock's going to go. So a lot of the time it's really gauging where's the overall market, where are option prices, and what is the best way to express my view on something. And the great thing is there's different ways to do that depending on where you are.
So I'm just going to give you a little shout out because I started following you because I realized I've been trading options for, gosh, almost 20 years now, but as a retail trader. And I saw the insights. And so what I like about you is you're not a one trick pony. There's a lot of people out there. There's just cash secure puts, covered calls, is with your acumen of knowledge from your professional pedigree in this industry. you're just constantly looking for the opportunity. And so I was able to see that, like, oh, wow, he noticed that there's this weird vol skew on Bitcoin. And so he's crafting his strategies in real time according to what the market is offering, instead of like trying to do the old, well, if all you have is a hammer, everything looks like a nail. Right. And so I like the fact that you were really, really nimble. I've since joined your Discord trading group, and there's a lot of really cool ideas. In fact, we're going to share one in just a little bit. That's like a super advanced strategy that, like, having almost 20 years in option trading, I'd never thought of anything like that. But again, Han saw the opportunity. So highly recommend you follow him on Twitter. You do have some courses for people that really want to kind of crash course this, and I think they're pretty reasonably priced. And it comes with some monthly screen time. Do you want to talk about that a little bit?
Yeah. We have there's sort of a full flagship course that just started this week, so that's a little bit more in depth. It does start out, from the beginning, but we get into sort of some little bit, we get into deeper into skew and some of the things that we've talked about today. But a great way for many people has been to start with this program we have called the Crush the Premium program, and it is very reasonable. I think it's 447 right now, and it's a full system that really has 4 pillars of edge. So I like to, I ran almost $1 billion in option strategies over my career, and a lot of listed ETFs that trade options as well. So, and then I was a market maker. So I sort of always have looked at things from a risk standpoint. For me, there's as much, the whole game is as much about avoiding bad trades as it is about having great trades. And so there's really that sort of recognition that, in certain kinds of markets, you really have to take your foot off the pedal. There's no sitting on your hands is a very valid position. And so that's, I think, one of the things that people appreciate once they take my programs. They go, oh, you're not just doing the same old thing all the time. You're recognizing risk. And that's very important to me, because I hate this. This is a pet peeve of mine. You'll hear people talk about, oh, I've got a 95% win rate. Well, you can have a 95% win rate trading options and still lose money over time. Win rate is meaningless. It's one small part of it, but you have to back up win rate with actual how much money have you made. And so for me, it's all about risk. So the Crush the Premium program is a step-by-step program to do exactly that. I look at things from a stock standpoint, picking the right stocks, looking at the right, things on the chart, looking at volatility and figuring out which options you want to sell. If you're more aggressive, you do certain ones. If you're less aggressive, you do certain ones. And positions don't always stay positive. You might have, it's like, many marriages, you go in with the greatest of intentions, and then, trouble brews at some point. And so it's part of the game is also figuring out what to do when you have to start playing defense. And a big part of that, I'll let you in on it, a big part of that is this word called acceptance. And you just have to accept what the market is giving you. And I see too many people who come to me and they go, things aren't working out for me. And I dissect what they're doing, and I'm going, well, you're disregarding what the market is telling you. You're telling Mr. Market that he's wrong. And
Good
we
luck
can
with
never
that.
do that. So a big part of the program is really going, okay, well, what is going on here? Is the market telling me to hang on to my hat because there's a storm brewing? Or is it telling me that the skies are blue and it's time to press on the gas pedal because volatility is low and all these tailwinds are behind us? That requires a different approach. So it's really about pivoting and understanding and acceptance, and knowing what to do at the right times. And it's not a game of perfect. We're not always going to get things right. But as long as we have a set of rules and guardrails to kind of play within, we're going to have a pretty good idea of how to react to most situations.
That's great. And just for people watching on my channel, there's going to be links below to be part of Hans's program at any level, regardless of where you're at with the trading. And I do earn an affiliate link, but I'm going to pass some of that savings on to you guys with some special pricing when you use my code. Let's go back to let's jump into the really complicated trade, because the market's going to close in 5 minutes. So it'd be great to set this up with real pricing. So is this the 1-1-2 strategy? Like, this blew my mind when I first heard this. And let's do it with iBit, because I think a lot of people are in similar shoes to me, where it's like, if Bitcoin just has a mega dump, like, I'd be happy to buy it way lower. And so this is one of those trades similar to what he shows, that as long as it stays up, I'm making money no matter what. My worst case scenario is I have to buy Bitcoin way lower. Now, it may even go lower than that. And if we could stay above the 44 strike, yeah, perfect. You're already there. But you can also get kind of like not a free insurance policy, but you can finance an insurance policy on the way down. Is that it?
Yeah, you can really help to alleviate some of the cost of that insurance policy. But of course, you need to understand that below a certain level, you're
Yeah.
going to own Bitcoin. And I think I think people kind of get into options thinking that it's a magic bullet that's going to, accomplish everything, in your dreams. But oftentimes it really is about just kind of figuring out where you're comfortable owning something, and setting up something that kind of achieves that potential, that potential outcome. And so with a 112, you can kind of create a strategy where there's a big area of potential profit there because you're creating a put spread that gives you a little bit of protection. And then you're financing that with a way, way out of the money put. A lot of pros will do this in the S&P. They'll do a 1-1 and then sell super, super cheap puts way, 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 way out of the money. Now, on an August 5th, that can get a little bit dicey because you do have markets that occasionally have that big downdraft, and that's going to challenge your position a little bit. So you always want to make sure that this is a strategy that's well within your comfort zone and well within
Of
the
course. So
margin that you're looking at.
DYOR, do your own research. Just to set up the levels, it looks like the break evens at 42. That's off my charts, but 44 and 45 is Bitcoin 77K for 44, and 45 is
Yeah.
Bitcoin 79. And so this is actually a debit, correct?
We can
Is it a
actually
debit?
bring that up a little bit. We can make
Yeah,
it even if we make it a 48.
perfect.
And let's see here. Let's go.
Can we make it
Let's
a
go with
slight
a
credit?
50.
Yeah.
Yeah, there's a slight credit for you. So you have a slight credit um, right here, so that no matter what, you're going to make a little bit of money to the upside. But if it comes down, you're going to have a pretty significant tent in here of potential profitability. And so that's pretty wide between $45 and $55. That's a very, very big area for you to potentially make a little bit of money.
So let's start from
And
the far right. If Bitcoin stays above, what is that, 55 and a half or 56? What for the minimal credit?
yeah,
Where is that? 55. So if
that's
Bitcoin stays
55.
above 96,600, you make how much? What is that credit? I can't see it.
It's $30 on a one lot,
50
right? So
bucks?
it's $30.
Oh, $30.
30,
So
$30 on a one lot.
so this is a net positive trade. You're collecting $30. This is a no cost thing. You're
Yeah.
collecting $30. Now, in order to do that, you have to make some promises. And the promises are you're going to buy iBit at 50, which is 88K. And you're going to buy some more iBit at 48, which is Bitcoin 84K. And if you're willing to do that, right? If you're willing to do that, where is your profit between that? Like I can see it starts to steepen from that's the max profit, but where does it start to steepen
Yeah.
from? Is that 55? Like once it starts getting below 55, you're actually making money. So this is a quasi insurance policy to for a short term dip from
Yeah.
55 to what is that, 40? Like
48 is going to be the strike where you start to
give
give a
up.
little bit of this potential profit back. So you can think of this as this is an insurance policy. The way that I love to look at these things is
Okay.
this is an insurance policy that is going to pay me within a certain reasonable range of Bitcoin dropping.
Okay.
But beyond a certain point, I'm going to kind of own Bitcoin at about whatever it is, $46, 40 low
That
45s.
okay.
Um, so it's kind of okay. If we drop a little bit, I'm going to make some money. If we drop a whole bunch,
I'm going
I'm
to
going to
buy
make
Bitcoin.
I'm going to make a whole bunch of money. And then if we really, really drop, I'm going to buy Bitcoin. So it's kind of like little win, pretty big win, and then the ultimate is owning Bitcoin at a really great price, which you could maybe label as the biggest win. So it's kind of
Let's just hit those levels. Let's just hit the worst case scenario. So I think is that 45 where that's your effective break even.
yeah, yeah,
So you
yeah,
that's Bitcoin 79K. So essentially you have to be okay paying 79K. Like it's only one, it's a one, or this is, you would get 200 share, or no, you would get one share. So you have to buy 100 shares of iBit for essentially $45, which is basically Bitcoin 79K. Is that
right.
correct? Like that's the max risk here. The
Yeah.
max risk is you're going to pay 79K pricing for 50 for $4,500 of Bitcoin.
Now, I
Correct?
will say, Hutch, that this because of what we talked. Remember, we talked about the caller being vol edge positive, meaning you're selling
Yes.
that expensive call to buy that less expensive put. This is a
Yes.
trade that doesn't give you as much vol edge. It's achieving something. There's no question that this is how it looks at expiry. The blue line is the expiry line. The magenta line is sort of your daily line, which you can kind of ignore
Got it.
because you know where you really sit at expiry. But because this doesn't have that steep downside skew necessarily, you don't get as, it doesn't look as good as it would. If you did something like this in the SPY, it would look really terrific. You would get a really, really, you would get an extra low cost basis on a similar kind of trade because the SPY has extremely expensive put skew. So in
Got it.
this in the Bitcoin complex, it's a strategy that can make sense because it absolutely unequivocally gets you iBit at $45. But from a vol edge perspective, you can make these things look even better in Microsoft or Nvidia or something like that. But it's definitely a really, really cool strategy. And one of the nice things about these sorts of things is what it's what one of our weaknesses as traders, as human beings, really, is that we can get in our own way in all kinds of things, right? And in trading,
Mm.
that's no different. So when we start to see something coming down, we're very good at going, you know what? I'm going to be super patient. I'm not going to buy this thing until $46. I'll tell you what, that is hard to do. We've all been in this position where we're tempted, and we pull the trigger too early, and it keeps
Mm.
going down, and we got in too early. Sometimes having a structure where you are committed to owning something at a very defined price is a nice way for you to kind of manage
Mm.
your own self. You're
Mm.
not going to get in the way of this. You're not going to buy iBit at $54. You're committing to owning it at 55. So it's a nice kind of way to sort of commit to a level and go, you know what? Anything that happens in the meantime to me is noise. And I like that
You just don't.
I like that small thing.
So you don't even manage it. And can you just hit me the top of the tent, like the two top of the tent poles? So your max profit is how much there?
$500 on a one lot. So you could make 500, you could make
Between
anywhere from, let's say reasonably, you can make anywhere from $100 at 46, $125 at 46, all the way to, what is that,
54.
$125 at 54. So really between 46 and 54, you're turning something that's costing you that's
Nothing.
making you money. In fact, that's making
Yeah.
you $30. I mean, there's some margin there, right? Like you have to commit to owning iBit at $45. So you
Yeah.
need to have your $4,500 sitting there.
But you're getting paid. So let's just do
You're
that.
getting paid. Yeah.
$30 divided by 4,500, right?
Yeah.
You're making a little over 0.5% for 46 days, which is whatever. It's like savings accounts rates.
Yeah.
But now all of a sudden you start to profit. You start to profit more if Bitcoin is between, if iBit is between. Well, let's just use Bitcoin prices. What's that top of the tent? Those two poles. Is it 48 and 51? Like just the two edges of that max profit.
Yeah, pretty much
40,
48 and
48
50, about
of
50.
50.
Yeah.
Yeah.
So very close.
So between 48 and 50, like that's Bitcoin 84 and Bitcoin 88. You make $500 there. And like Hans said, between iBit 54, which is 94K all the way down to 79K, you're making now 100 something dollars on your money. And all of it is cash flow positive. You're keeping that $30. if it's anywhere above where it is today. And essentially you're just promising, you're committing to saying, you know what, I'll buy $4,500 worth of iBit at essentially when Bitcoin is priced at 79K. Is that it in a nutshell?
That's it. You got it. And it's a
Cool.
fun, it's a really fun structure that gives you a lot of ways to look at it and a lot of ways to win. It's a beautiful structure that you can use, that you can generate with options. Very nice. That's one nice thing about community is, so that's really, for me, that's a great program, and there are all kinds out there. But the great program will have education. It'll have somebody like me who's guiding you, and it'll have community. Because once you've done all that early stuff and the learning and learning the skills and the tools, you want to have somewhere where you can have that nurtured and have that support that is really very important to a trader. So we try to offer everything.
I can attest you're very active in there, which is really cool, because that's not always the case. A lot of times there is communities, but it's just a bunch of mods. But you have the Wizard of Oz who's actually in his community participating on a very regular basis.
I can't help it.
Hey, Hans,
I love this stuff, so I'm always trying to help people. I probably spend too much time in there, but it's what I love. I'm a trader at heart, right? So you're going to find people who are good educators. They're good traders. I've managed $1 billion, so I've kind of done it all. So you're going to get that perspective, which is what the kind of the feedback that I get is, hey, wow, you're telling me stuff that I haven't seen anywhere else. And that's kind of the fun part, is having that light bulb go off above people's heads when I do, like I did one last night, and the guy's like, oh my gosh, I didn't know any of this stuff. I've been in these masterminds where, they don't teach you anything. They're ridiculous. So that's always fun for me to give somebody a new skill, to teach them a trade like this, where they go, wow, I had no idea. And that's
I definitely learned something today. And so I really appreciate you being on. Thank you for coming. Hope everybody else learned something. At the very least, just learn what's possible, and that there is another dimension. It's not just token go up, token go down. By adding in the dimensions of time decay, theta, profiting off time marching on, which we know is going to happen no matter what, and volatility, profiting off these big moves and volatility, and having somebody who really, that's your main thing, right, Hans? Is like, you're like a volatility sniper. You're just like looking for those opportunities because they're so temporary, right? It's like, the sky is falling. No, it's not. Yes, it is. No, it's not. And profit, having a way to profit off that. So I really appreciate you being here today.
I appreciate you having me, Hutch, and I hope everybody enjoyed it. And we'll do it again at some point.
Definitely drop Hans a follow. There'll be links to his courses and educational packages below. And we'll see you guys next time. Take care.
Bye-bye.